Welcome to TheoTrade. This is Don Kaufman. It's July 30th, 2025. Just about 45 minutes after the cash close here on this Wednesday afternoon. S&Ps right now are up some 19 points, but hey, look at these S&Ps. It wasn't always that way. I mean, we were trading 64.25, then we're trading 63.66 and rallied back. This is when you should start to realize how wild things are really getting. What do I mean by that? Well, I'll tell you exactly what I mean. I mean, tech has, in effect, become more important than the Fed. Allow me to explain that and much more here, of course, in this TheoTrade evening video. When tech is more important than the Fed, markets are really starting to lose, all scope, if you will, of reality here. All right, so let's start just a brief discussion. Like, look, there's no real recap of the Fed. What did the Fed do? Absolutely nothing. They're very data dependent, specifically employment dependent, and the marketplace didn't like it. We were trading right here. Okay, right, basically at 64.25, some big sell side activity. I mean, we traded from 64.25 right in this neighborhood here, 64.25. You sold off a pretty rapid sell off too, all the way down to 63, 66, and then just a little bit we were trickling to the upside. Boom, the bell goes off. When the bell goes off, what happened? Okay, there's Microsoft. Okay, and Meta after the bell. Microsoft Meta exploded back to what? 64.25. This is it's like a roundhouse kick. And the Nasdaq, okay, well, this is really where it really did justice. The Nasdaq actually incrementally moved the entire marketplace, and that's where I say, like, in all seriousness, tech right now seems to mean more than the Fed. So at that point, you're living in I think a kind of a little bit of a fantasy world. So the S&P is up some 19 points, and it really is predicated specifically on like Microsoft. Okay, take a look at this in the after hours. Now, listen, it's not over yet. We haven't had the conference call, right? This thing could probably not reverse, but it can see a little bit of sell side activity, but it's a pretty spectacular move. I mean, you're basically trading like, let's call it 515. Now you're trading 550. All right, what's a 30, 35 point move amongst friends? The reality is, okay, in Microsoft, you're double what the expected move was. So this one was a little bit of a shocker to the marketplace. Moreover, if you take a look at Meta, and this is, to me, what matters more than anything, is the expected move in Meta was $41. Actual move right now, you're like 60, 65 bucks. Okay, you're way outside what was expected. But again, there's a conference call. Things could actually change a little bit. This thing blew through. And again, I don't care about earnings estimates. I don't care about any of that. Okay, I don't care what they say in the conference call. It blew through what the marketplace anticipated. That's the biggest takeaway from here. When the marketplace says, oh, it's supposed to move 41 bucks, and you realize there are billions of dollars. There's 500,000 options that traded inside of Meta today. Inside of Microsoft, okay, Microsoft did over 400,000 contracts today. Okay, billions and billions of dollars are being traded on these things. And guess what? The marketplace got it wrong. Okay, got it dramatically wrong. And all of a sudden, the marketplace, spikes back to the upside. Of course, you're going to hear from the likes of like Apple and Amazon tomorrow. But I mean, literally, okay, when you see the Fed speak, and this is a pivotal day, the Fed speaks. What does the Fed say? As I said, the Fed didn't say anything. They just data dependent. Okay, there's some sell side activity. The markets didn't like it. It didn't even matter. It's like it didn't happen. Okay, the entire Fed announcement, nope, completely negated. And what do? We bid right back up in the S&Ps. In fact, if you look at the S&Ps and you're looking at a 30-day 1 hour, it's a pretty insightful chart because people are like, oh, it's an unbelievable rally. Really? Well, we traded 6,300. Pretty much flatlining. Now we're basically at 6,400. I mean, just outside of, it's still an incredibly, incredibly tight range. Like, basically most of the month of July has been, almost all the trade has been 100, 150 point range. We're definitely towards the upper edge of that. Okay, we'll see what actually occurs tonight, but I don't expect like a blistering rally necessarily tonight. What's more important than this is like, again, the reason I'm pointing out that tech all of a sudden now is more important than the Fed actually makes sense when you have what, trillion-dollar plus companies. And, what is Meta? Well, Meta right now is closing in on a $2 trillion market cap. Obviously, Microsoft is one of the biggest monkeys on the block out there. If you guys want to take a quick glance at the market capitalization of Microsoft, okay, closed the day at 3.8 trillion. Of course, is it's going to hit the oh so important $4 trillion market cap. Okay, kind of makes sense to actually say that they're more important than the Fed at this point. As illogical as that may sound, because monetary policy itself, okay, is defining the economy. It's not anymore, and it's kind of a paramount shift. It's probably the biggest takeaway, because you're going to hear from the likes of Apple tomorrow. I'm less inclined to even discuss that, but you're going to hear from Apple, but you're also going to hear from Amazon tomorrow. This is pivotal stuff. Absolutely pivotal stuff. These underlyings, like if you get two more bullish moves in here, okay, this marketplace absolutely smashes to the upside. Okay, it's going to feel impervious to any pain that's coming, and literally you're going to hear the headlines is tech is, as I said, tech is more important than the Fed. Okay, in tech we trust. It's not even going to be in the dollar anymore. It's in tech we trust. Speaking of the dollar, the dollar is exploding back to the upside, just ripping, which is actually hammering some of the commodities, including like gold, maybe not so much oil, but gold seeing a little bit of sell side activity, but gold has been basically range bound. But one of the things with the dollar being this strong led me to believe that some of the order flow that was going to come out after hours was probably negative. Okay, and it's just anything but. Literally anything but wildly positive moves that you're seeing in the after hours today. Okay, further, crushing volatility down. Again, in the after hours here, the vol crush actually came. If you take a look at the volatility futures, those two got a nice volatility crush. Moreover, towards the bottom of the screen, even the VVIX. Okay, the VVIX. Okay, we're all the way back down to 94. Like, look, people. The point I'm trying to make over here is, one day we actually have, Microsoft and Meta that come out and you're like, holy crap, look at that, Microsoft and Meta. And then tomorrow could be a completely different story. And the reason I'm bringing this up is we were starting to hit some pretty extreme numbers, like the VVIX, that's the volatility. Again, the VVIX is the volatility of the VIX itself. This thing cracked into the 100 range. At 100, I'm starting to pay attention, so volatility started to pick up, and all of a sudden it got slaughtered. Now, as I said, it's not over with these earnings. I mean, not only can something be said on a conference call, like, Meta's spending a gazillion dollars on hiring people. Meta's got like the dream team of like developer geeks, $100 million bonuses. No one cares. Okay. But the truth be told, Apple and Amazon can kind of redefine the way that we're feeling right now. And speaking of Amazon, the irony is like Amazon almost looks like it had earnings. Okay, literally, Amazon has already got a bid underneath it. So there's Amazon better smash its earnings expectations, or it's going to get absolutely crushed. I mean, there's some wild things going on the screen. Amazon, is up, $5-6 after hours, predicated on what? Absolutely nothing. It only has a $12 expected move too in tomorrow's earnings announcement. It's a lot to think about. All right, timeout. Switching gears. You can see even things like the financials. Okay, the financials ended up, bit lower on the trading session. Some sell side activity there, even some follow through sell side on the following the after hours over here. And the reason I'm bringing up the financials is you would think to yourself, well, what does that have anything to do? Okay, with what? It has to do with the Fed, of course. It has nothing to do with the earnings though, per se, in tech, but it does. It's the rotation, and the rotation right now, it's coming back. The rotation is coming back towards technology. It just hasn't been there. I was pointing this out a substantial amount, okay, in the last couple of weeks of trade. The QQQ, quite frankly, in the last few weeks of trade, it wasn't able to get out of its own way. Like last week, the QQQ completely underperformed, where the S&P kind of outperformed. This week, okay, the Qs have actually been completely and totally flat up until basically right now, okay, to where we're going to hit the upper edge of the expected move in the QQQ. Speaking of which, okay, so tech is going to be strong, but it looks like it's going to be a rotation. That is, tech is going to be strong, okay, at the risk of saying, though, we may see some sell-side activity in other sectors, okay? We're not really seeing a lot of, new money. We're seeing, rotate. It's like running to one side of the boat, then running to the other side of the boat. Seeing a lot of heavy rotations right now, but all of a sudden, it's a tech world, and you're just living in it. Let's cruise over to the SPX. Okay, one of the things that we discuss extensively here at TheoTrade is expected moves. And this expected move this week, You were looking for a 90, again, a $90 move. $90 was the expected move. And that doesn't mean, okay, anything more than plus or minus. $90 move to the upside and $90 move to the downside. Where are we right now? You know, the irony is that we actually closed, and if I zoom in on this, and I'll really get some detail going in here, but we actually closed, okay, just about $30 below, okay, $30 below where we started the week. So pretty moderate moves this week. Like nothing happened on Monday, nothing really happened on Tuesday. Here we are on Wednesday, things really picked up, okay, and we sold off like 30 handles, and all of a sudden, pop, we're going to open tomorrow massively unchanged. And what's wild about that, though, is holy crap, for Thursday and Friday, people, we have these expansive moves that are still plausible. Now, everybody, again, they're all looking, they're like, well, that move is going to be to the upside unequivocally. Conference calls haven't happened. I'm not bared up for this one, but the conference calls haven't happened. You haven't had Amazon, you haven't had Apple, okay? Those quarters could be, anything but spectacular. But the bottom line is, it's going to matter about these rotations too. We're going to watch this real carefully tomorrow. Watch stuff like the financials. Again, don't you find it interesting? Financials seeing some sell side activity in the after hours. Okay. I don't think a lot of people are looking at this stuff. Okay. Look around a little bit. Maybe a little bit of a bid to XLY into the end of the day. Okay. Here we actually have what? The industrials. Okay. Seeing some sell side activity after hours. People, it's not what you thought it was. It's not what you thought. Okay. You're even seeing what? XLP, consumer staples, possibly some sell side activity in the after hours. Okay. All at what? Well, okay. For nothing but NASDAQ. All right, this is it. Mark the day, July 30th, 2025, the day technology basically replaced the Fed. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.